there, but definitely you need a margin account. Right. So yesterday's highs, where was that? Somewhere about 14, somewhere about here yesterday, and then it came down, and this is still ES, and expectation was for ES to come back down, give up at least 20-25 points. So let me open up. Let me open up not the 1 hour chart, oh, and this will start to make sense here. Right. So this is the 1 hour SPX chart. We got this, and it was expected that it will take a breather here, and getting overbought on the RSI, overbought on the Williams R. So there was this breather coming up. And how much of a breather? Obviously, you can trace it back to 5, then 8, then the mean, right? So it's sitting somewhere around here right now, 38.27. Very likely about, let's say, 25, 30 points behind ES. ES is, if ES is about 38.45, then SPX is about somewhere here, 38.25, within this range, somewhere between this range, 25 to 20, within this range. Right. So if it breaches here, 38.20, SPX should bounce somewhere about here. And if you look at the ES, it should bounce somewhere around here. And then it is looking for a bounce, and looks like we have a major moving average here, and conditions are getting oversold. So if we get a bounce, then very likely the bounce will come back into the 538.51 on ES. This is on ES. And if you want to look at SPX, just go 20-25 points behind ES, and then you'll get the number for the SPX. So the first push is 38.51, that clears. 38.52, that clears. Then the 8 is at 38.53. Then 38.56 will be a pretty decent resistance for ES. That clears, then we got our mean sitting all the way at 38.63 for ES. So that would mean, excuse me, a test of about 38.40 on 38.38, 38.40 again on SPX side of things. And again, that should act as a pretty much decent resistance. And if that clears again, 38.48, and if that clears again, we'll have to deal with 38.55. And I'll show you where am I getting that number from again. But that's the idea here for SPX. Right now, it's somewhere about here, 38.25 to 38.20, within this range. If it moves up from here, then you have to deal with this 38.31, 38.32, and then all the way up here at 38.41, then here at 38.47. Then a major resistance will come around at 38.54, 38.55. That clears, then we'll look forward for further upside for SPX. Till that time, not really looking forward for much of an upside on SPX side of things. Downside, let's look at downside. Downside is pretty much 38.43 around here for now. That's the downside. And if that breaches, then we have to deal with probably 38.41, then 38.36. If 38.36 breaches on ES, then we'll reassess the situation. Let's get here. But here, this is the daily chart for ES, and this is the chart I've been tracking for a while, and we still have a floor around 37.86. Whether it's going to get hit today or not, that remains to be seen. Uh, because it's a Friday and it will be followed by a long weekend, a very bright chance that if the Friday sell-off happens, probably towards the later half of the session for any given reason, China situation, or Chinese travelers required are being required for a COVID test now. That situation, or and then I think Chinese situation, the COVID situation in China is getting worse. Seems like it will get worse before it gets better. But where the cities where the COVID is peak, those cities are coming back online, and those cities are doing relatively well compared to the other ones. I think now the death toll per day is about 9,000 in China, COVID related. So let's see how that plays out. And it seems like there's pretty decent evidence from the funeral homes, and then you have the hospital data that is coming in. So that situation is, however, until those numbers start to seep into balance sheets, I don't really bother about it. And the moment it starts to seep into the balance sheet starts to bleed, that's when the whole narrative changes, and people will start looking at China as more of a China reopen as more of a risk rather than more of a headwind rather than a tailwind. At this moment, going by what China government is saying, they're still pushing economic reform or growth agenda into the economy, and that is relatively going well relatively, right? And then it's still not there, but expectation is that China, being an relatively, I don't know, authoritarian government or whatever you want to call it, so China, when the government says something, you have to go by what the government's saying. So if the government is saying that China is doing relatively well on their COVID and reopen strategy, and probably it is doing well. So if that's the case, then I'm still looking forward for upside. If that's not the case, then I'm looking forward for downside. My downside case is still here, 3783 on the ES. So that would mean about 3750 on SPX to the downside. Not really plotting anything below that, but that needs to be. If you need to watch this space, you need to watch this space. Usually, what happens is that trade doesn't go down and just test a low and bounce off of that. It'll go back down, test it again, then go back up. So that hasn't happened with this 3783, and there's a reason for that, and the reason is here on the SPX chart. This line is holding it pretty decent. It's not letting it go down here. This 38 15 38 13 range. It's not letting SPX go down further. And if it comes to this line again on SPX 38 15 38 13, this will hold again today. Very likely. And we'll see if it breaches below here, then we'll reassess the downside, perhaps all the way down into 37 40, 37.50. But as of now, that's not the plan. As of now, expecting if it comes down to 37, sorry, 38.15, 38.13, again, looking for a bounce here. Perhaps a bounce could last again into 5, then 8. This is what is happening with SPX right now on the daily daily chart. So let's say SPX reaches up here. Again, the same story will play out. My only concern here yesterday was when I was watching SPX, I would have wanted it to close below, up above this green line, above this blue line. This is the 5 on the daily, and I wanted it to close above it. So tomorrow, that means today, when it opens, it will have a very decent chance of hitting this number again, 3844. And if this number clears, then we have a clean shot at hitting this number, 3887. This is where I was getting my 3887. And now let's get on to this chart. In On the ES side of things, you see this chart is hitting this 5 and 8, the anchor on the weekly. Now look at this chart. This is the SPX weekly chart. So it is still detached from its 5. Bright chances, and this is the reason I was saying that there are bright chances of 3880. And there are still bright chances of 3880 happening. And if Apple pulls up, and we'll have this number tested. So Anchor is detached since 2 weeks. Last week it did not touch it. This week it did not touch it. It cannot stay away from the anchor, for more than, I don't know, a couple of weeks. Either the technicals have to come down, that means a sell-off, or the price itself has to move up. And I was hoping for a price to move up, but let's see how that plays out. Uh, let's get into let's get into some of Apple. Apple will get into later. Right. Let's get into this trade here. Not the trade, but the 10-year. So the 10-year here, the expectation yesterday was for the 10-year to come back down and probably 3.7, 3.80, and come back down and rest here at 3.73. Obviously, that is still in the play, and we are still expecting this to kind of calm down. Uh, as of now, there is no need for 10-year to go violent or anything, but the it's this is normal behavior, about a percent to 2% on us 10. This is normal behavior. We don't want to see it move 10%, 8% in a day. This is not a meme stock and should not behave as a meme stock. Let's get here on the right. So this was the expectation yesterday that it will hit this resistance and take a breather. It did take a breather yesterday, and we saw a bit of a rally on the markets. And today it's holding the five. Now, the understanding is that if it comes back down, if it breaches the five again, then very likely it's going to test this number here 3.79, 3.80. That breaches, it's going to come back down here into 3.77, and should 10-year, and then there are bright chances of 10-year taking that path to the downside and testing at least its five on the Heikenaushi again, and we'll see how it behaves there again. And if 10-year takes this path to the downside, the 5 daily and the 8 daily, then obviously it will have an impact on the DXY, and that in turn will obviously have an impact on the risk assets. Risk asset being stocks and crypto and other ones. So yeah, watching that trade. Again, if it comes back down, it will pull DXY with it. If DXY comes down, then very likely we'll have risk assets to the upside. Let's look at DXY here. So DXY, it is breaking, and it there are pretty decent reasons for DXY to move to the upside. It has a major support here. Got oversold on multiple indicators, but it's still unable to push to the upside. Reason being, the Bank of Japan played a major role in pushing this thing down. I think a couple of days back, Bank of Japan again intervene with the bond purchases. So that's going on there, and that's keeping a lid on DXY for now. DXY is still pinned below this a 5 and 8 on the weekly, and we want to see it continue that way. Uh, but the technicals are suggesting a push to the upside. Now, how much of a push? I don't know. Again, this black line right here, the 50 moving average, this has been acting as pretty decent support so far for 3 weeks or into 4 weeks, and expecting that to act as pretty decent resistance now, right? Going pushing to the upside, very likely 104.42 right about here, 104.37 to 104.42. That clears very likely the 5 at 104.70. So not really plotting anything above the 5. However, if it clears the 5 to the upside, 104.70, 104.77, then very likely a push all the way into 105.59, 105.60. And if DXY takes this path to the upside, then very likely it'll push the risk assets to the downside. Let's take a look here. This is a pretty decent chart, and DXY is still pinned below. By and large, it's still pinned below the 5 and 8. And to the upside, if it starts to move to the upside, again, the same resistance, 5, that clears the 8. And if it clears the 8, we are looking for a mean reversion, 104.52. And if it takes, now it's getting to a point where it'll look for a bounce again, right? RSI is all the way down here, and we know this. Anytime RSI comes all the way down here at the bottom of this range, we're looking for a bounce. And if DXY takes a bounce, probably around 103 for 49, 103.50 area. If it does, even from here, if it does start to bounce, then probably we'll look for a bounce till 104, then 104.10, then very likely 104.18 to 104.20. That clears, then very likely a push all the way into the mean. And again, the same scenario, if DXY goes up, then it will push the risk assets to the downside. One thing that is notable is this guy, Bitcoin. Even with all of this things happening, Bitcoin is still holding relatively well here. And let's quickly look at the Bitcoin side of things. Looks like the Bitcoin has, by and large, it is still related. It is still correlated with the Nasdaq, but I think it's leaving some of that correlation behind now. Uh, but yeah, I think it's getting oversold here. So very likely we want to see it clear this 16,900, and very likely push all the way into 17,200. About 500 to 700. And if it does there, if it does move to the upside, then very likely we'll see a risk asset move along with it. For now, there's no reason for that to happen, but let's see. Let's see. This is not really relevant as of now. Let's go into VIX. VIX, let's see VIX here. VIX has been relatively very, very, very range bound here, right? And to the upside, it's still tracking below this 50 moving average. To the downside, it's still holding this 1980. So until this range breaks on VIX, either to the upside, the 50 moving average here about 2340, or to the downside about here 1980, I think VIX will still remain range bound. And upside is if VIX goes above the 50 moving average. And one thing that we want to that we are seeing is that 50 moving average. This is pushing down pretty relatively well, right? And that means there is weakness in VIX. People are not really buying protection as of now. As of now, how things stand, people are not looking to buy protection, and that's a few days back or few couple of weeks back. Some people noted this crossover here, the 50 above 200. This is called a golden cross or something like that. That happened. That people said that it's going to push up or whatnot, and that's sometimes that happens, and sometimes that is just a non-event, like in the case of VIX. And when it happened, 50 above 200, VIX actually gave up. Now we still have this 50 below 200 here, and then VIX still holding relatively well. So these are just moving averages. You can use them to get a picture of how people are thinking about things, or where the relative fundamentals are with regard to technicals. But it's nothing, there's nothing concrete about any of this stuff. Let's say an X moving average goes above Y moving average, it's Death Star or something. It's nothing like that. These are just guiding principles that you need to be aware of, because many people look at it and they try to trade it that way, but nothing is concrete. Anyways, so pushing up, if VIX starts to push to the upside, and this is the line I'm watching here, the 50 moving average on the daily, 2350 area to 2360 area. If it clears there, then I'll take VIX seriously. If not, I'll just let it go. VIX here, yeah, well, yeah, here it is showing clear signs of over sold picture here, but we'll still keep it relative to the daily chart. Because we are day traders, we want to keep it relative to the day chart, and better yet, we want to go here, and this is the line I'm watching for VIX right about here. It should hit this, and very likely it should start to take a breather. RSI is all the way up here, and this RSI is all the up here. So very likely it's going to take a breather after hitting this number. However, if it clears this 200 moving average on the hour, 2236, then very likely push into 2250. I'm looking for a breather around, if it clears here, then again a breather around 2250. Will that be right about 2350 is the max that I could look at. So for now, this is my line here, 2230 area. That clears 2236. That clears about 2250. That clears about 2260. This is the upside path on the hour. If it clears the third standard deviation, then likely there'll be more sell off. For now, we want to see it pin down below this 200 moving average. Last time, the same thing happened. It cleared the 200 moving average, but was unable to clear the third standard deviation here. So still expecting the same thing to happen. Probably hit the second standard deviation and hit this super half trend here, 2250, and start to take a breather. And yeah, if VIX starts to take a breather, then very likely we'll have upside movement in SPX. Looks like a majority of the market participants are looking for a breather here. Right, let's get into Apple here. Apple on the week is still weak, and we're still tracking. Probably Apple to the downside. About 120 is my number because I'm going by the monthly chart here. Probably again, this is not a story for today. Very likely this is a story for the first quarter of 122.96 and probably into 120, then very likely into 116. And should the guidance come in weak or the numbers come in weak, then we are expecting it to hit this 108 area. And we are looking for a bounce around here, 108, 107 area, right about here. That's the bigger picture, though. And Here on the week, the anchor is detached on the week. It's been 2 weeks like that, just like the SPX is doing. Right here, it's pulled down all the way to the bottom of the range on the RSI. That means RSI is oversold. We are looking for a bounce again. If the bounce comes in, I don't know if it's going to go all the way up into 135, 136. I don't think so that's going to happen. And even if it happens, that is not a story for today. Probably going into next week, next month, we might see this thing come back into the five again. But as of now, it is still relatively pinned below here, five. Even if it comes back up to the five, I don't see it going beyond five at all. Let's go Apple here. Right. Yesterday, we were looking for Apple to push to the upside because of the RSI. Anytime RSI goes down here, pulls up and goes all the way up to the five. This is just how it works. And I'm also watching this thing here. MACD. MACD is pulled all the way down here. And if it starts to curl to the upside, then very likely we'll see the five get tested again. As of now, the five is sitting at 129.99, around 130. And if it hits the five at 130, then move all the way. There are bright chances of it clearing the five this time and moving up all the way into the eight at about 130, 167. Again, these lines are dynamic. These will change according to the data. As and when the data gets populated, these lines will change. I'm pretty sure this chart will be inconclusive. Well, got overbought, gave up the gains, and I think I put out this note yesterday saying that it is overbought and it had to come back down. Mean reversion happened on the hour. Very likely it's going to push into probably at the open 127.84 and then probably 127.50. We will reassess the situation right about here. And in fact, we're looking for a bounce, probably an ephemeral bounce going by what the RSI is doing here, and if it bounces, then it'll go back into the mean 128.40, then push into the five, then the eight, and this is a very critical level right about here, 128.80, 128.90 area, then push all the way into 129.50. This is the path to the upside. Path to the downside, 127.50. A likelihood of a bounce here. Then, if that breaches, very likely it's going to push into 126, rather 127. Then, very likely into 125.60. If Apple takes this path to the downside and breaches below, I'm looking for a first bounce here around 127.50 area. That breaches second bounce, looking for 127 area. As of now, not really plotting anything below that. And if it does breach below 127, then we'll reassess the situation, not just on the Apple, but on broadly on the broader market as well. The broader market being S&P. Right. And let's get into. Do we have time? Yeah, we still have time. Let's get into Tesla. Tesla on the week, it's still showing clear overbought signs, and it's giving us this doji sort of a thing. Still not a doji, but yeah, it's okay to call it a doji. I think if it starts to push up, there's a bright chance of 146. Again, this is not a story for today. This is a story for next week. If that happens, if the selling subsides, then there's a story for the next week. This is the prevalent chart. I'm pretty sure majority of the market participants are watching this chart. Clearly oversold here. Clearly SMI crossing to the upside. and I haven't seen this SMI pull all the way down so far, unless it's some kind of a meme stock. I haven't seen this in a while for a major stock. It's not normal, and obviously the sell-off in Tesla is was not normal, right? And expectation from Tesla is yesterday we were expecting this 120, 122 to get hit, and we were correct about it. Tesla hit this 122 and stopped there. And today, expectation is for it to clear this number and push all the way up into the 8, 127, 128. And these lines are again dynamic, as these lines will change as and when the data gets populated. So as of now, expecting 127.80 to 127, well, rather 127 to 128 within that range to get tested. That clears very likely a push all the way into 142. Again, this 142 area is not a story for today, probably a story for next week. And I'm trading next week contracts. No, not really trying to YOLO into today it's contracts. So yeah, looking forward for this number to get tested today. And if market holds, this will get tested. And Tesla will play a big role today psychologically. And again, today being a Friday and to be followed with a long weekend, uh, uh, be cautious about the upside. Uh, be a bit cautious about the upside. All right, we still have time, 3 minutes. Can you look at MU? Yeah, we can look at MU. MU, this whole sector is beaten down, right? This whole sector is beaten down. I think they had relatively weak guidance going into their earnings. So push, if starts to push, probably 48 is where I'm looking at for this thing to go. And if that clears, then probably 44.50. This 44.50 is relatively safe, I think, here. And if I want to be trading, probably this is not the stock I want to be trading. Yesterday, I did put a note about Nvidia that we're going to get a bounce in Nvidia, and yesterday we got a bounce in Nvidia, and the idea was for Nvidia to short even after the bounce, right? And it came back down. So I would trade something like an Nvidia versus MU if I'm trading options. But if I'm trading equity, probably I'll still stick with something like a MU or Lam Research, LRCX. Let's get into the daily chart. Yeah, we are still looking forward for this bounce. Probably if it comes back down into, if it comes back up into 50.20, very bright chance of that happening today, 50.20. That clears again a push into probably 50.60. And that should be it for the day. But if that clears, then very likely a push into 51.92, about 52 here. So to the downside, we are still playing 48 and that clears them probably about here 44. And if somebody's a seller, you can sell 44 and probably look for look for it to take a position around this area 44. All right, 2 minutes to open. Let's get into live trading.